Join us tomorrow on Market Call. Michael Hainsworth's guest will be Andy Nasser. He's Managing Director and Senior Portfolio Manager at Middlefield Capital. He'll be taking your questions on North American dividend stocks and REITs. So get a head start and send your questions to marketcall@bnn.ca. We are looking at an email from Colin. He wants a comparison between Air Canada and WestJet. If David were to buy an airline in Canada, which would he choose, Air Canada or WestJet, and why? Or would you buy neither of them?
Okay, so this is a little bit of a loaded question for me. Air Canada is a big holding for us, and we were fortunate to buy this one down around $2. So it's been a great winner.
Yeah.
You have to remember that the airline model is a highly leveraged model, very high fixed costs, and as either revenues go up or if you can cut your expenses, it can create a huge change in your earnings. And Air Canada has benefited from both. Both Air Canada and WestJet are seeing a rise in revenues. Their seat utilization is at record levels. Air Canada has been replacing planes and becoming more efficient and has been very good at cutting costs at the same time. So both of those things are really helping to add to earnings. For Air Canada also, of course, there was a big concern about their pension liability, which magically we find has sort of been put behind them.
Yeah, they have a surplus now.
They have a surplus. So highly leveraged business model, which is how the stock can go up, 5 or 6 or 7 times over the course of a year. We really like the airline industry as a whole. We are invested right now, and remember, this can always change, but we own American Airlines, we own UAL, and we own Air Canada. We don't own any WestJet currently. WestJet is growing nicely. Their revenues, I think, are up about 7% on the year, so they are getting growth in revenues. They have less cost cutting to do on the other side, so there's less of change taking place. I think you could own a number of these in this industry. Just remember that they are cyclical. They're all being helped by the fact that fuel prices have been muted, and I think that that's likely to continue to be the case as oil and gas production in North America continues to grow and hold prices down.
And now the question for many with Air Canada is they look at that stock pretty well going straight up, and they think, well, it's got to come down at some point. But it's trading at 8 times estimated forward earnings. So.
Yeah, and we think those estimates are too low. So we think that actually there's quite a bit of room left in this. But this is not one to buy for your income portfolio, right? There is risk in airline stocks, and you have to remember that they can really go the wrong way. But if your thesis is that interest rates are likely to stay fairly muted, and if your thesis is that inflation helps the consumer and that their financing costs are going down and their food and energy costs are staying low, the first thing they want to spend money on is leisure, is travel. And businesses are spending a little bit more money on travel, and that gives the airlines pricing capability. As they raise their prices, of course, it becomes much more profitable. So if you think the cycle has some legs in it, we do, slow improvement, then these things probably continue to perform quite well.
All right, David. Next up is Ron, who's in Richmond Hill, Ontario. Hi, Ron.
Good evening, gentlemen. Fantastic show. We really benefit from it.
Great, thanks.
Mr. Burrows, it's been a long time since I've seen you on the program. I picked up potash last year, probably in September, early September, around the $32 mark. And a lot of the guests on Market Call seem to be pretty negative on the stock, citing a lack of Chinese buyers and so forth.
Ron, aren't you asking about Husky Energy? No?
We can talk about potash. That's fine.
Okay.
Oh, I'm sorry. I had given the two of them my mistake. Okay, then I'll take that one.
Potash is fine.
Potash is fine.
Okay, yeah.
Potash is fine.
Thank you.
Ron, look, I won't argue that potash is up a little over the last year. On a relative basis versus lots of other stocks in the market, not performing so well. We've been in a very strong market, and potash has basically acted in line with the market. I think that when you look at what's going on with grain pricing, which is extremely weak, if you look at what's been going on with fertilizer prices, they're not particularly strong. I don't think this is the place to focus. Our view is, based on our work, that the commodity sectors, other than some very targeted holdings, are probably not the best place to be. So not to say you can't make money. If the wind at your tail gets strong enough, anything will fly. But at this point, I think that you have higher odds of success in some other sectors.
Another break here, and we'll come right back with more of your questions after this.